Welcome back. You're watching Big Deal and we are discussing the reverse flipping aspect by the startups. So Mitul, we did discuss the IFSCA measures and the tax efficiency that is required. But a lot of startups want to come back to India, re-domicile on the mainland because of the IPO as a prospect. As an investor, what are the suggestions that you are giving to your portfolio companies who have this particular mandate of an IPO exit for the investors? And on the other hand, how do you see this panning out and the time limit in which the reverse flipping can be done tax efficiently?
So IPO, I think, has turned out to be a really good option that we see, at least in the medium to long term. We've had a couple of our portfolio companies successfully list on the SME exchange. We have likes of Paytm, Nykaa, etc., that have gone on the main bourse. So a lot of these companies that were domiciled outside, who essentially have India customer bases, India operations, India team, and don't really have too much outside. I think for them, it's a really good strategy. I think the one other thing that we've also had discussions with our portfolio on is the whole valuation aspects, right? So a company at a $250 million, $500 million, $1 billion valuation may not be very significant on a stock exchange, let's say in the US, but if someone comes and lists in India, there is a decent prospect that they would have. There is an increased attention on the space, on the tech space. There is interest that is coming in from HNIs or the investors that would typically invest in real estate and listed entities, and all of a sudden they're seeing a lot of activity happening on the startup space. So I think it is definitely a good option. We have been very big proponents with our IPO. In fact, we've for the last year and a half or so, the team has been having various conversations with companies that are on the path to IPO, is what we are calling them. From a time frame perspective, yes, reverse externalization or reverse flipping will take some time, but I don't think the IPO market is running away. Even if it takes 12 months, 15 months, 18 months as outer limits, there are still prospects for sure. I don't think that would be a big hindrance. The faster it happens, the better, the clearer the regulations are, it will help. But I don't think that would be a very, very big constraining factor.
But Mitul, the way the markets have behaved in this particular week itself and the pressure that we have seen on the valuations, we'll have to see. I mean, there's no hurry to do an IPO probably at this time. But I would pinpoint one thing. This whole flip-flop of flipping and reverse flipping has happened in a very short period of time. And the market is very cyclical. Even though the markets present good opportunities today here, the US markets could also become buoyant in some time. Having said that, Ajay Rootti, do you think 12 to 15 months is a rational timeline to look forward to? What are those discussions that you're having with your clients? And are there enough solutions to the tax efficiency bit also? Do you think some of the reverse flipping is taking shape in a year's time?
Nisha, that's an interesting question. And the reason is, and I'll just take it from where you left, which is the flip-flop happening and a lot of flips happen and then a reverse flip. I think here the first thing, and that's something that I've been seeing when I'm talking to my clients, is there's no one shoe that fits all kind of a solution. So it's not that everybody has to flip back or reverse flip. I think that's the first thing. It works for certain cases. It may not in certain cases, not just for tax reasons, but also other commercial reasons. Now, coming back to tax efficiency of flipping, yes, there are efficient ways of doing it. And there is a need to do a few more things from a tax regulation perspective to make it tax efficient. One easy way or tax efficient way is really to do a cross-border merger, merging it into Indian company, and therefore there are certain exemptions available for it to be a tax-neutral merger if certain conditions are fulfilled. Now, the only problem is that's not going to happen in a quick timeline because you need multiple approvals for that. You may even need a RBI approval in case you don't really fall into the cross-border merger automatic route, if we can call that, regulations that RBI has issued. So therefore, you could do that. Swap is another option which can be achieved quickly, which is you really swap the shares, but that leads to a taxable event in India, and not just in India, possibly in the host country as well. So there will be aspects of double taxation, credits, etc. that come in. So there's again no simple answer here as to whether the flip back or the reverse flipping can be done. But there are options which can be considered. But it's again a choice between a timeline that you're looking at and making it tax efficient. A tax efficient option to be done in 12 to 18 months is you're running against the clock there.
All right. And away from the IFSCA committee, Siddarth, wearing your investor hat and somebody who knows the startup space so well, what do you have to say about the fintech push, apart from other regulators also involved in the reverse flipping and giving dispensation for that or making some changes? RBI also plays a very big role. So fintech, sector has the most number of aspirants for reverse flipping. How do you see the scenario and what are the challenges there?
No, Nisha, that's actually a fantastic question, because I think we've seen a number of our fintech unicorns have also chosen to domicile overseas. And many of them are actually facing issues right now in terms of actually getting their licenses within India itself. Indian regulations actually requires that the foreign company which is in financial services to also be regulated. Whereas foreign regulations also at times may not end up actually regulating, the company may end up actually regulating a subsidiary for that matter. So I think these sort of friction points and this sort of dissonance between regulation end up becoming a major issue for a number of fintechs who've actually flipped overseas and they're looking to end up starting and operating in India as of now. So one of the things I think that's going to be most important, because IFSCA is also a fellow Indian financial services regulator, I think one of the things that's also there is in case the companies are actually domiciled in GIFT, for that matter, the fit and proper criteria, some of the checks that are required from an Indian perspective, from PNL perspective, should hopefully also end up being relied on by the Indian regulators when these companies look to actually end up creating their Indian subsidiaries and look at getting Indian licenses itself. I think we've actually seen of late a number of just as an example, it may not be related to this, but just as an example, a few of the companies who applied for the PAPG licenses as well as an NBFC licenses have actually seen their licenses being put on hold because they actually have foreign overseas structures. So it actually takes time for the Indian regulators, be it RBI or SEBI, to end up going deeper into this entire place, start looking at the fit and proper criteria of all the people over there, look at the UBOs who end up existing over there itself. So I think if these companies are actually domiciled in GIFT, some of these issues can end up actually being relied upon, and the work and the turnaround time can end up actually reducing to a large extent itself. Because some of the thesis for having a foreign overseas entity, when your market is in India, you're working in the Indian financial markets, regulated by Indian financial regulator, some of this, that overseas entity becomes an added level of friction. So there's also a need for them to end up coming back. And from the regulatory standpoint, people are hoping that IFSCA being an Indian regulator, this reliance can actually be made. And the turnaround time for licenses can end up reducing, thereby making them a lot more nimble and a lot more agile as well.
That's right. In fact, Siddarth, on many various aspects, GIFT City and IFSCA have made some fabulous breakthroughs in getting a lot of regulators come together and give the clearances and dispensations required for increasing its traction. But we have to see in terms of the reverse flipping, how popular IFSCA is going to get. Mitul, what's your understanding? Mainland reverse flipping versus IFSCA with the various measures that can really come to the fore for dispensation for a faster reverse flipping in IFSCA versus mainland, which Ajay says is quite difficult and, it can be a long haul process. Given these two, what are the differences and what could be the choice at the moment?
So I think, both of them are in some sense untested. Yes, we've had cases of PhonePe. We have a couple of others that we've known in the news that are evaluating that. But the process of reverse flipping, whether it's mainland or IFSCA, today is unknown in some sense. It's not tested, right? So to that extent, I think they're similar. What I would say is different is IFSC, GIFT as an authority, have been very open and they have a primary objective of trying to expand that jurisdiction, right? So they may be more amenable or, they may have more attention on addressing issues. So to that extent, I think it may be a little faster on the GIFT side. On choosing what jurisdiction, I think it'll largely depend on, what the end objective is, right? So if the end objective is IPO in the mainland, then there is no choice. Everyone has to come to the mainland.
Exactly, Mitul. Yeah, so that's the main crux as well. So Siddarth, do you think some of those issues can be addressed where an IFSCA flip can also lead to an IPO, or Indian investors can also invest there. Can there be dispensations around that? How do you see this evolving?
Yeah, I think that is actually one of the points we debated rather heavily in the committee as well, for that matter, because as we know, since IFSC is considered foreign jurisdiction, anyone who invests over there from India will have to go either the ODI, overseas investment route, or they have to go through the LRS route itself, for that matter. And there are very severe restrictions when it comes to investing foreign capital overseas, when that capital ends up actually coming back to India. So, round tripping has been clarified to a large extent. It may actually end up creating added friction over there, especially with the TCS on LRS, as well as several committees that have actually come about. So one of the things that we also propose, and it's a matter that's going to be discussed, is in case these companies actually domicile in GIFT, would it be possible for Indian investors, Indian mutual funds, your institutional investors, family offices, HNIs, retail investors, to end up investing over there? Or can a dual listing happen where the companies list on the Indian mainland bourse and simultaneously on the GIFT IFSC exchange as well? So that way they end up actually being able to raise capital from foreign investors as well as from domestic investors without requiring large-scale changes when it comes to existing regulation itself. Because I think from the IPO perspective, the Indian companies will still have to end up actually raising money from Indian investors and to create that kind of buzz in India in order for them to become very successful. And for all the companies looking to redomicile back to India, listing on the Indian exchange and actually getting that sort of enthusiasm from Indian retail investors and other investors is a key impetus for them to decide to actually flip back to India.
All right. So, that point well made. Ajay, I have just 30 seconds. Any final comments you want to make on the challenges and how do you see that going forward? Because you're in the thick of the action and you're working on some of these cases as well.
I think, immediate response would be that the ball is in the government's court now, both in terms of the report that IFSCA has given and even otherwise, in the economic survey, there was a mention of reverse flipping. I think there has to be a enabling regulatory framework, both tax and otherwise, that has to be done. I think that's the need of the hour rather than anything else. And once those come in, then this will be, the Ghar Wapasi, as you called it, will be much easier and more tax efficient.
All right, gentlemen, very good points made there. A lot of insights on this hot topic of development in the startup space. But I must also state that I was in Delhi and I met some of the ministries and the Ghar Wapsi theme is very much on top of the mind for the government, and the industry is also baking in an expectation for some of those announcements to come in the budget as well. Let's see how this develops at the moment, but lots of loose ends here and lots of changes and dispensations that need to be there for the startups to re-domicile into the Indian market where they operate. Thank you so much, Siddarth, Mitul and Ajay, for joining us with your insights. With that, it's a wrap on this edition of Big Deal. Thanks so much for tuning in.